Hello guys, welcome in today's crypto technical analysis. We'll do again a multiple time frame analysis for BTC. However, before we start, I've got a small request as usual. If you guys are learning and enjoying from the content, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss any accurate market updates. Yesterday we had a weekly close, and there is not much to talk about the weekly levels. The support levels based on a higher time frame is exactly the same, as well as the resistance levels, which I'm keep mentioning in the last previous videos. As a resistance, 33,000 is extremely important. The next one is going to be 36.5. Without claiming this resistance, it's going to be early for us to talk about the weekly time frame. We'll get back into the consolidation. However, higher time frame support level is going to be the first one, 17,200, all the way. That's going to come the next levels that I'm pinned on the Twitter as well, the blue box, that's a higher time frame support box. And once we're going to get a rejection, I will start covering the levels based on that support box. But immediate resistance levels based on a weekly time frame, $33,000. However, it is early to talk about it. An immediate support level is going to be $17,200. Moving on to a daily time frame. Based on a daily time frame, we've got an interesting scenario. Once we lost $59,560,000, as you can see, perfectly retested it, and then we started dumping based on a daily time frame. However, we consolidated a bit in here, and then with the $48,000, where we had a higher time frame resistance, and that was a second opportunity to exit from the market, we had a fake out, bullish fake out based on a daily time frame. However, once we reached $25,000, as well as at this moment, we're trying in the previous videos that I mentioned that the levels $22,000 all the way up to $23,000 are extremely important, and we can see that in a lower time frame, the Fibonacci levels. However, as I said, if you manage to exit from $60,000, 59,500 all the way up to higher time frame Fibonacci 786, you saw 70% dump in the market, and with the current price action, over 60% dump in the market, and there is no reason to panic at this stage. And based on a daily time frame, it is too early to talk about the bullish scenario and to enter into a long setup. And we're seeing in the last 4 days a perfect green candles, and as you can see with today's candle, we're trying to break $22,000 and trying to go all the way up to $23,000. The current price action, even we broke the local highs and we're trying to break the second previous local high, I'm not expecting that the market structure change. The reason is mid-high time frame is just against the daily time frame, and it didn't provide a bare minimum, the weak bearish signal, and as a result, this bullish setup could be a fake out, and we will see in a minute why and where we're going to get a rejection from. So the daily time frame, as I said, there is no need to panic. Yes, we didn't print a lower lows, and we printed higher lows actually, and then the price action started going towards the upside. As I said, we have to move on to a lower time frame, 4-hour time frame. Based on a 4-hour time frame, the perfect exit levels were 25,000, 24,800, and the last one was at around 23,000 and $23,500. And since then, average from $23,800. Once we exited from market, we saw a massive dump in the market in the first place, all the way up to, if you remember, we had the 0.618, the golden pocket, that was 15%, 618, the golden pocket, and the support level was an important level, was 22%. However, the daily time frame, the support was extremely important, and we saw a massive 25% dump in the market. At the same time, if you're a conservative trader, the exit level from 23,500, that provided 17 to 20% dump in the market. However, based on a 4-hour time frame, as I said in the last video, as soon as we managed to claim above $21,500, $21,000, 4-hour time frame started moving towards the bullish territory, and it went out from the consolidation. Before we move on to further analysis, if you want to learn all this technical analysis, what I'm showing, and if you want to become an independent professional trader, or you're interested in the institutional trading system, you can message me via Telegram at Magnate8, and one-on-one intense masterclass is available, where I'm going to teach you how to become a profitable and professional trader in the market. And it only takes you 5 to 10 hours to master this all. And during the course, you will learn day trading, scalping, swing, and as well as the long-term as an investor trading systems. So right at this moment, if you're going to take this Fibonacci from all the way up to 25,200, the local high, and the local low, which was $18,540, $50, you will see that we're approaching to 0.618, the golden pocket. In the last video, once we approached nearly to 382, we expected actually, because it was on a consolidation zone, we expected to dump all the way up to 19,900, all the way up to 20,100. However, that failed, and this is not the ideal zone to trade if you're a swing trader. For those missed to exit right from 0.618 all the way from the daily time frame, it is slightly early, and I'm expecting the rejection from 618. Usually this is what you're going to get once in the first place if you start touching to 618. And at the same time, if you look for the traditional market is also approaching, the entire market is approaching to extremely important the resistance levels. And at the same time, I provided the time factor as well. That was exactly based on a 4-hour time frame, 7th of September on the UTC time in the morning, 12 o'clock. We touched exactly to the bottom and we started pumping. So these are extremely important levels that you have to pay attention. Once I shared over the Twitter, you were above 0.382, and that was a highly likely that you're going to go and test the 618. And then the next level that you have to pay attention is 14th of September, 4 a.m. the UTC time. So you can give it 24-hour plus minus, but that's going to be extremely important. In my opinion, we're going to touch a couple of times maybe, and we will see a rejection. Because even though 4-hour time frame under the bull's control, however, the mid-high time frame is not supporting this bullish signal. Moving on to 2-hour time frame. Based on 2-hour time frame, once we cleared $19,500 with this beautiful candle without retest, we started pumping all the way up to $22,500 from $20,000. So 2-hour time frame is heavily under the bull's control. Without giving a retracement pullback, we're just nearly going to kiss 0.618, the golden pocket. So $21,800, $22,000 based on a 2-hour time frame, extremely important. Once we're going to lose this level, that you have to be cautious. However, losing 20,500, 20,000, which is just that we have a confluence with a 382, it's going to be a panic in the market, and highly likely we will see a further blood in the market. We need to also pay attention for 4-hour time frame as well as mid-high time frames. I'm expecting, as long as based on a 4-hour time frame, if we can be above 20,500 all the way up to 20,700, and we get a confirmation based on a mid-high time frame, and then highly likely we can go all the way. This time we can break 618, the golden pocket. However, I'm not giving too much weight at this stage that even though without getting a bullish setup from mid-high time frame to break 618. We came to an end of this episode and the levels are clear. If you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching, and I'll see you in the next one.